So we're here today to talk about contracts, invoices and protecting your work. And importantly, that will predominantly be talking about trading ventures and protecting your work as a trade or as a business, basically. The subject matter is going to be spread over the next hour and a half or so. I welcome questions as we go along. So the first question is usually that, who the chuff am I? And why would you sit and listen to me? So I'm just a local boy. I'm York born and bred. I have accountancy qualifications that I was afternoon.
Oh, sorry.
That's quite all right. Take a seat.
Sorry.
It's not a problem. So I'm local accountancy practice, about 15 members of staff. We advise businesses of all sizes and natures. I take trainees from the universities in your train them up and see if we can get them to having either professional qualifications in the same way that I have, or being in a situation where they can learn by experience and carve a career in accountancy, whether it be in practice or working in big organisations like this or bigger industry, basically. So over those years, I'm 55 now, so over those years, I started when I was 17, left local school and started on trading contracts. So over those years, we've advised and I've advised all businesses of all natures with lots and lots of stories, good and bad, but lots and lots of success and lots of growth and development of those businesses. As the phrase says, from small acorns, mighty oaks grow. We've had a lot of experience of that. So that's us. Our obviously been in practice, as I say, can't reiterate that enough, is that we advise lots and lots of businesses, lots and lots of charities and organisations. We are not accountants who sit in one organisation and just work for that one. So we get to see a lot of life, a lot of business life. And it's not all about tax. People think that being an accountant is all about tax. Normally tax is the big driver for people to come and bring their work to us, because all businesses have to have submissions to the tax office every year. So that means that they've got to, well, invariably have to have some help with that. Because it's technical and a bit tricky, basically. So that's me, that's my background. I welcome question and answers as we go along. We just interrupt at any point. I would much prefer interaction with us all, basically. So if I'm going too quick, too slow, any questions, even if you've got anything that's not necessarily relative to what we're currently, the slide that we've got up, just fire away, because we've got the small group, we've got enough time. So does that all seem okay, everybody? Do you want to tell me a little bit about yourselves and about where you are? Wait, should we start that end? Start this end. You're up first.
I want to create a subsystem which is like an integrated into your normal operational systems like iOS, macOS, Windows, all that. Integrated into that, make a subsystem based on AI and blockchain technology.
Yeah, right. AI and blockchain.
I'm assuming you know, yeah, and I'm studying computer science.
Excellent, excellent. So
Yeah. As I develop the business idea, so I would like to keep track eye on the transactions, the contracts between the company and to for the development of it.
excellent, excellent. Yourself?
So I'm a student here as well, and I'll start a social media marketing agency. And I want to kind of manage companies like social media as their online brand and stuff to help drive traffic to their businesses and stuff like that. So but I like a lot of clients on retainers and stuff, so this is quite a good one for me to do.
So is that Google AdWords in the book?
That'll be what I want to maybe get to initially. Right now, it's just gonna be like, say, Instagram. Make sure they've got that online presence to drive customers, and then as I get a scale up, it goes towards like Google and
Got it.
search engines and stuff.
Okay, good. So
Hi, so I work here as a student success advisor, but I'm also a qualified yoga teacher. And I'd quite like to go freelance teaching as well as working here. And yeah, just sort of trying to figure out how to do that and navigate freelance work.
excellent, excellent. Yourself?
I'd like to work for myself too.
Do ads. Very good. And are you looking to forge a business doing that, hopefully? Yeah. Very good. Very good. We look after a couple of artists, so and we look after people with AI and tech businesses, so we're aware of all that. So well, and yoga teachers, we look after yoga teachers. And mum was a yoga teacher. So Yeah, bless her. So, you guys online, do you want to shout up and tell me who you are?
Sorry, my name is Lily, and I've currently got my own publishing press. And I'm kind of like wanting to take it further, but it's been going really well recently. And I just wanted to learn more of the business side of stuff, especially like contracts and invoices and stuff like that, because I mean, at the moment I'm doing a publishing master's, and in my undergraduate, I did English Lit and creative writing. So I've got like no idea in terms of finances, contracts, business stuff. That's all my partner's stuff. He did a business degree. So I just kind of let him do it all for now. But I'm kind of wanting to take more of like a head on it because it is my business.
Yeah. Yeah. Okay, that's great. Thank you for that. Welcome. Have we got 2 online? There's 1. Right, so that's it. That's everybody. That's great. So what I'm picking up from the audience is predominantly business or hopeful to be in business. So therefore, whilst the framework of today is about contracts, invoices and protecting your work, if you want to ask any questions about business as we go along, I'm not very good at hanging wallpaper and managing cards, but I'm very good at business and tax. So fire away as and when we go along. So what are the aims of today? What are we looking to leave with? Well, as I popped on my flyer, and I think that went out and about to everybody, is you need to come away from today, hopefully, with a recognition of the importance of contracts and invoices and receipts and protections of your intellectual property. Why those things are important, why they're sometimes more important in certain industries and less important in others. When you need to consider those things, because as we'll get on to later, certain elements of those sections, pricing, it's costly because we're using IP attorneys and things like that. So when should you do it? So that's important. When you make the initial inquiries, basically, goes without saying, you can just Google this stuff, but we'll get on to that. Basically, where do you make first contacts with people who are going to help you? And why would you bother? Why would you bother looking into all these matters of contracts and invoicing and receipts and stuff? So that's the aim, is to go away with those things fulfilled. The key thing as regards what we're going to talk about today is that the matter in the middle, which is about the tax, predominantly the tax office, or if you're going to trade as a company, your obligation to Companies House. That is a subject matter that is about the size of this room, but we've only got the time to talk about this much of it. But I'll point you in the right direction to make sure that you understand what your obligations are going forwards and how to meet them. Nothing to be scared of. This is the key thing. This is all positivity. Nothing to be scared of at all. Okay, so that's what we're hoping to do. Contracts, invoices and receipts, record keeping, intellectual property protection. Is anybody unsure what any of those categories are, what that might mean? No? Okay.
Sorry, record keeping, is that just keeping a record of like all the finances that you get in and out and stuff like that?
That's exactly right. The transactions of your business or your venture, yeah.
Amazing.
Exactly that. So we're going to do quite a big chunk on that because it's really important. Okay. Right. There will not be a lot of narrative on my slides because writing things down all the time or making notes is great, but you don't need lots of narrative on there from me. I'll do the talking. These are just things to prompt as we go along. Everything that we're going to talk about today is about protection. It's about protecting your business, protecting your ideas, and protecting you from any adverse reactions from the authorities, specifically the tax office. We're going to talk a lot about the tax office as we go forwards. But the key thing to remember is you may start thinking, why am I bothering with all this? Why do I have to do this? The more that you can do of this, the more protected you will be. The more that you will protect your business. Your business will be unable to be copied and opened up next door, basically. So it's all about protection. You're going to get sick of seeing those the Wonder Woman and the Superman slide because it is all about protection. So to make a start, contracts. Why would we bother with contracts? What is a contract? Why are they important? Why is it important to have contracts? Well, some contracts will be forced upon you. when you're in business, and some contracts you will want to generate. So as a business venture, you're likely to be looking at these kind of contracts at some point in your business journey. So commercial contracts is catch-all really. Terms and conditions, that is predominantly going to be the terms and conditions of your organisation dealing with customers or potential customers. Leases, so leases of property, buildings, assets, things like that, that's a contract. And equity movements, equity being the shareholdings or the ownership of the business, predominantly there'll be underpinning contracts for that. So contracts are absolutely everywhere, but obviously at the start, when you venture, when the venture is relatively modest, then what we don't want to do is spend all our time exercising contracts and regulatory bits and pieces, whilst what we really want to do is get out there and get some customers. So why are contracts important? Well, they're important because they underpin the activities of your business. In very simple terms, you need contracts to ensure that if anybody acts outside of the normal behaviours that you would expect, you have a piece of paper that says, well, you agreed to this on this day, and we want that, and we've exercised our duties, our services, our pricing in accordance with the contract, basically. That's exactly the same thing if you have a lease for a building or for a piece of kit or some IT software licenses, is that you use those licenses, you use that kit in accordance with the contract. So it basically, a contract is a legal binding document that binds one side and the other side into this is how we will interact, basically. So that is why contracts are important, is because it means that if you're in a situation where people are, or your customers or people who are allied to your business are not behaving in the way that you should, then you have a contract that says, I thought we'd agreed this. And if they're exercising things that are detrimental to your business, then you can take that contract to the court and basically ask the judge to make a decision. So one of the easiest contracts to understand is your terms and conditions. So your terms and conditions, that contract can be 1 page long, can be 50 pages long. It basically states how you will and how you won't interact with your clients, what you will and won't do with their data, their money, their fees, what you will provide, what you won't provide. So those terms and conditions are really, really important. So if we take an example of my practice, basically, we are a regulated industry. We're regulated by the Institute of Chartered Accountants. And that basically means that we are governed with regards to how we interact with our clients. So if we take an example, we get a phone call and somebody says, I'd like to bring my accounts to you. I've already got an existing business. I'd like to bring my accounts and tax affairs to you. What do we have to do? Well, we have a meeting. We can provide that first meeting free of charge, and we are allowed to exercise some advice in that meeting. But currently, we don't hold that client's engagement. We don't have a legal right to contract with that client until the client instructs us that they want to open a file in my office. Now, I appreciate that this might sound a little bit sticky and a little bit over-ambitious, but we're a regulated industry. And under those regulations, the majority of it makes a lot of sense. Because if we're in a situation where we start advising our clients and we haven't agreed a price, we haven't agreed a timescales when we're going to turn this advice around, and the clients start to think, well, this advice isn't very good, or the advice is great, but I didn't realise I was going to get charged £10,000, then we end up in a situation where there can be disagreements. So for us, there are 2 pieces of paper that go out when we engage our clients. The first one is our letter of engagement. That is driven by the Institute, our regulators. So for your businesses that you've mentioned to me, you probably won't need too much of this side. But it does declare what we do with people's data. So GDPR policy. So that contract will say we will hold your data for this long and for these purposes. It's important, data, we all need protected with our identity. So it will also say that this is how we work out your fees. This is when we will invoice you for work. These are the nature of people who will work on your affairs. This is what we have been asked to do for you, and this is what we haven't been asked to do for you. So again, you can look at those letter engagements and think, well, they're a bit dull and they're a bit boring. They probably are. But if we get to a stage where one of our clients at some stage says, well, thanks to those 2 invoices, Ian, I've paid that one for that's for the accounts work, but I haven't paid this one because it's for tax. And of course, we would go back to the engagement letter that says, well, this is the contract. That's the engagement letter as a contract. And in there, it says, this is what you've asked us to do. And it says, you've asked us to do your tax. So if we're in a situation where the client will pay for this service, but not pay for that service, the engagement letter comes back out, the contract comes out to make it clear that this is what you asked of us and this is what we've delivered. Really, really good practice to marry up your engagement letter with your terms and conditions. So for you guys who are not in regulated industries, your terms and conditions are critical. And it literally says, what do you want us to provide you with? What's roughly what will the pricing be? What happens if we fall out? What happens over data and things like that? So more so than engagement letters, terms and conditions are what you want to set up for your business. Specifically if you're in a matter of service. So for a yoga school, for argument's sake, you're not going to say to every single pupil, well, here's our terms and conditions, please sign there. But there might be a standard declaration. Every time I've been to a yoga class, there's a standard declaration about your health and things like that. So in essence, that's like a contract. You're saying I need to know this, and those people need to be honest and fair with their answers. So, but for those of you that are going to be providing services, then it's critically important that you basically say, this is when we will invoice you, this is when payment is due, this is what we have the right to do, this is what we will not do. So terms and conditions, when it comes down to, do I need them? Yes, you do. And when should I have them? The day that you get your first customer, first paying customer. You can go online and see some standard terms and conditions, trading terms and conditions, wording. I can speak to a solicitor. They are relatively standard for small businesses, service providers specifically, relatively standard. It's a totally different ballgame if your business is anything to do with product. So if you're dealing with something that you manufacture or that you sell, customize and sell, then your terms and conditions will be much bigger, because in essence, when you're providing services, you invest your time with your customers, charge them for the fee they're paying for it. When you've got something physical in your hand as a business that you've made and that you're going to sell, the question is, when have you sold it? When do you have the legal right that it's not yours anymore? It's your customers. And specifically over the matters of if there's a disagreement over the design of it, doesn't matter whether this is soft tech or physical tech. What's about the design of it, the functionality of it, the price of it, when is it still yours and when is it still theirs? And your terms and conditions will clearly show that. I must highlight that what we don't want to be doing is getting the terms and conditions out all the time, but that contract protects your business when you do, basically. So over the last 12, 13 years, how many times have we had to get our engagement letters out with some of our clients to say, well, you agreed to this. We currently have 650, 700 clients, and I think we've probably had to get the engagement letters out less than 10 times in 12 or 13 years. But the point is it underpins, they adopt it, so everybody works in that contract. Does that make sense? So it might sound a little bit over-officious, but it's actually quite important. So terms and conditions is a good one for protecting. Let's have a think about other contracts that you might enter into as a business. Very obvious one is leases. So let's take an obvious example. If we end up in a situation where we want to rent a hot desk, we want to rent a unit, or we want to rent some big offices, then invariably that will be underpinned by a contract. Again, it's legally binding. And that contract will say something along the lines of, I own this building, I own this desk, but you're allowed to use it. And as long as you pay these sums, and as long as you use it in this way, then you have the right to occupy and use it, basically. It's very, very important that whenever you get taking anything more than a desk, and some organisations, I'm sure it's the same, if you take a hot desk, there'll be some kind of licence. There needs to be a licence to occupy or a lease to underpin it. Because otherwise, the people who actually own the building that you sat in have every right to say, can you leave tomorrow? Most businesses don't want that. So a lease, specifically for buildings, is there to ensure that you have the right to occupy, you can't just be turfed out onto the street. And in return, the people who own the building and providing you with that facility have a right to expect to be paid. And those payments will be deemed in there. Very, very rarely nowadays will you get anything above a hot desk without some form of lease or license to occupy. Even if it's only a rolling lease that works for a month at a time, 3 months at a time, there's normally some pieces of paper somewhere that says this is how it works. So lease is absolutely critical. If we get on to the matter of equity, do people understand when I talk about equity in your businesses?
Is that finance?
It's the ownership, really, equity. So the share, if it's a company, the shareholders, and if it's a business of more than one person who are the partners, basically. So in all businesses, there's a difference between people who own the business and the people who are employed by the business. So we're talking about people who own the business.
So when people say they've got equity in a company, is that when they're investors in?
Yeah, exactly that. And so what you would exercise is most businesses nowadays trade as a company. I'm sure we'll get on to talking about differences of businesses, but most businesses trade as a company. And therefore, what contract should we have as a company? Well, the moment that you have more than one owner, I'm the only owner of my firm, so it's dead easy for me. But the moment that you have more than one owner, then there needs to be an agreement, contract. It's called a shareholders agreement for companies that basically says, this is who are the shareholders. This is how they are expected to behave and conduct themselves. This is what happens if they want to leave. This is what happens if sadly they get hit by a bus, whatever it might be. It basically sets out this is how we will work together. That's a contract. It's a contract between one equity holder and the other equity holder. And with the greatest respect, it doesn't matter if it's 50-50 or a third, or a quarter, or if one person has 1 or 2% and somebody has a huge percentage, it's still advisable to have that contract, shareholders agreement. As otherwise, you end up in a situation where you are in business together, you work great together, but then as predominantly as the business gets bigger, there will be more and more decisions. Should we take that unit there? Should we continue to work from home? Should we employ that individual? But if you can't agree, then the shareholders agreement will say, how do we get to an agreement? So it's not all about people falling out, people arguing. It's basically so that everybody understands that if you want to take equity in this business, this is how it will work. It's a piece of paper, again, well, appreciate soft copy, but a piece of paper that one person could say to another to say, well, we said we won't do this. You know, this is the basis that I'm in business with. So equity, ownership, contracts are really, really important. If you're not, sorry.
Oh, sorry. I've got currently my business. I've got 3 other people working with me, but they don't have any equity in the business. And I was talking to my mum about it the other day, and she said to start writing a contract for each of them, even though like they're volunteers and we don't get paid for it because the business is still really small, just to say, for example, one of them handles the website and the blog posts, and if they left the business to get another job somewhere else, they couldn't then take the blog post off the website because it's their writing, when in actual fact they're writing for the business and not for themselves. Would you say to do that then, to write a contract and establish?
Yeah, 100%. That is exactly what you're doing there. Is you know, the slide that you're going to see a lot of protecting. You're protecting that business, and it's great that those people are working for free. That's very kind of them. But despite that, you still need a piece of paper that says you are writing for this business. It is this business's property is what you are generating. You are not generating this for yourself, basically. So it's a really, really good point. So in essence, you need a mini contract of employment there. So contracts of employment, some of you, if you've had jobs along the way, will probably sign some or seen some, but contracts of employment are critically important because as an employer, I employ 14, 15 people. When I was in my previous partnership, we had 35, 38 people. And that employment contract is really important because it basically says, very similar to what we just discussed there, is that if you leave the business, then the clients are the businesses, they're not yours. Those clients can't go with you. So in addition to that, there will be matters of what happens if I want to leave? How notice do I have to give? How many weeks do I have to work before I can physically leave the building? So contracts of employment are critical, basically.
That'd be like the same as a non-compete agreement.
Yeah, non-compete agreement. They are what's called restricted covenants. So if you leave, then you're restricted by that. So when I was in my previous partnership and I decided to go and form my business in York, then there was what's called a restricted covenant in my contract, my shareholder agreement, that says that I wouldn't set up an accounting practice within 20 miles of the existing accounting practice, that I wouldn't take any staff members for at least 2 years, and that I wouldn't act for any client or any subsidiaries of any client for at least 2 years. That was in the contract. If that contract didn't exist, I could have left and done whatever I wanted to do. That wouldn't be fair to my old firm. It would have been great to me.
Yeah.
So you need those protections, basically. When people are working for your business, then they're working for the business. They're not working for themselves.
So would that fall in all under one like umbrella of a covenant, like a contract?
Yeah,
So all of these like aspects would fall
correct.
into one
Yeah.
simple contract, not like a multiple.
No, the only time you would have different contracts when it comes to personnel, manpower, is when you have some individuals who work for you as employees, either full-time or part-time. So that means that you've given them a job and you are taking their tax off them at source and exercising everything like that. It means that they have a right to holidays, a right to sick pay, maternity, paternity pay, all those things. But you're also entitled to take on consultants, basically subcontractors. So one of my staff is a subcontractor because she has work that she does for other practices. So she has a contract from me, but it's not an employment contract because she's not an employee. So she has a subcontract agreement between my firm and her firm, basically. And it works very similarly, apart from the fact is that when you're a subcontractor, then you can't be held as tightly as you can an employee, basically. So in there's still a clause that says you can't act for my clients.
Yeah.
And there's still a clause that says you can't take my staff. But when it comes down to that individual, can they or can they not set up a business next door? I can't stop them doing that because they are a business already. Does that make sense?
And then I guess she's limited, like she can't like share information from your side to
Correct.
the other side.
Correct. Yeah, and I think it's a really good point. So come back to it, the data and the protection of your data and know-how basically is critically important. So my contracts for my employees and for my contractors do not have what's referred to as a gagging order in. So a gagging order is you will never talk about how I run this business and how the business operates to the outside world. We don't put that in. But the reason why we don't put that in is because we're regulated and our regulations are client confidentiality. So that means that if one of my ex-employees is found to be talking in the outside world about this chap bought himself a new Ferrari, but his business didn't have any money, then that individual has broken the code of conduct for the institute, but he's also under my contract broken the law.
Is that the same as a non-disclosure agreement?
Yeah, non-disclosure agreement is a really good one. So non-disclosure agreements, so a gagging order is literally when somebody's leaving. This happens a lot in football, in soccer. If anybody follows football, you'll notice that you'll end up where, for argument's sake, Jose Mourinho as a manager, he's usually a bit fractious, it causes a few problems. Whenever he leaves, he never turns around and says, oh, I hated it at Tottenham. That's because they have gagging orders in every single contract. They're not allowed to talk about it. So we don't really operate that way. But non-disclosure agreements, that's a great point. So non-disclosure agreements are similar to gagging orders, which are, if I am going to bring you in as a partner in my firm, it means I've got to show you my accounts. It means I've got to make you an offer, talk to you about what your role is. The non-disclosure agreement is a contract, legal contract that says, I'll tell you everything, but you can't tell anybody else apart from your advantages. So if you have solicitors and accountants acting for you, or management consultants, that's fine. But you can't go to the pub on Friday night and say, Ian's just sent me all the accounts for his business. He does really well, you know, he's got all these businesses, all his clients he looks after. That's what an NDA does, non-disclosure agreement. It's a great example.
Can I ask a quick question about writing contracts?
Yeah.
Do you I mean, I don't know if this is really stupid, but do you need to have some kind of law background to be able to write a contract, or can anyone write a contract?
Anyone can write it. It's as legally binding whether you've written your own or whether the solicitors have written it. The only difference being is that if a lawyer or a firm of solicitors have written that contract, then the chances are it will probably have more of a formal structure to it, which will be commonplace in the UK law, rather than England and Wales law. So, so yes, you have every right to write that contract yourself, and it once signed by both sides, it is as binding as one that comes from a solicitor. Is that okay?
Yeah, that's fine. I was just thinking, like, for my own stuff, because I can't afford to pay for someone to write it, and I was like, does it still count if I write it? And like, but I guess it's like a piece of paper written, and if it's signed by both sides, it is legally binding. That's true.
Correct. Yeah, correct. And it may be the case of when I look back to when I set up my firm, there was only me when I took my first employee on. Then the first employee's contract of employment, I wrote it for exactly that reason. I didn't want to go to the solicitors and spend £2,000 for one piece of paper for one individual. I had no idea whether to get 15 people at the time. So, so I did exactly that. I wrote my own, and the my first employee was happy and agreed with that, and away we go. So, a couple of years later, when we've gone from just 2 of us up to 6 or 7 of us, then I engaged the solicitors and some HR consultants to do them properly. And that was mainly because we were then a much larger organisation, and we were involved with more of a variety of matters. And therefore, I also had more obligations to my regulators. So I had to have it done properly to 100% protect me and 100% to ensure that I was compliant with my regulators. So write your own by all means, but at some point when you grow and you've got a bit of spare cash, it would be well spent to get the solicitors or some HR consultants to look it over. Is that okay on matter of contracts?
Do you have to pay someone who doesn't fund every time you make a contract, or you can just buy it one time and then use that same contract over and over again, right?
Yeah, just buy it one time. So I appreciate this might be a little bit dull, but in my world it's relative. So we ended up where I was advised by my regulators and by my HR consultants that when COVID struck and the law was you're not allowed to go to work and these were legal obligations, I was advised that I had to amend all the contracts of employment. So I took some wording from my advisors and I added that to everybody else's contracts. So we put all those onto the contract. So everybody in essence got an extra piece of paper that said, this is the law under COVID and this is how it impacts upon your employment. Now, without going over all grounds, specifically what's going on with Boris currently and the review, which is going to take 3 years, the simple fact was that the law kept changing every 3, 4, 5, 6 months on COVID. So we, believe it or not, reissued our contracts of employment repeatedly during that time. And when it all finished and the government said there are no legal obligations over COVID anymore, then I had them rewritten all over again. So just to make sure that everything was right. Is that okay? So contracts for your business, critically important. Quite rightly, unfortunately, can get expensive. But you can write your own, or you can find stuff online. But I would recommend at some point is that when your businesses start to grow, then it is an investment to get those looked over or appraised by a firm of solicitors, lawyers, or HR professionals. So the reason why that screen is a diamond is because if you can comply with all your contracts, then you are an absolute diamond. Because we as a firm have, over the years, lots and lots of businesses of different size and natures. When people come into us and say, I've got a real problem with this customer, and say, oh, what's that? Oh, we've put this cabling in and they believe it's the wrong spec and they believe it's this. Or, oh, where's the paperwork? Oh, we didn't bother because we worked with them for 30 years. So you have no piece of paper that says, there's no specification that says that's what you asked us to do. This is what we've done. So as a business, you have, the more contracts you have in place, the more protected you are. But I appreciate it's not cheap. Okay. Record keeping. So we're going to get on to your obligations of your record keeping. This is underpinned by your contract with the government. We'll talk about the UK government specifically over taxation, so HM revenue and customs, and with Companies House, if you're a company or a public corporate, you have in essence, you've got a contract with them. So record keeping, for those who are old enough, isn't a piece of vinyl that we all used to listen to the Beatles on. That's the record keeping. Record keeping looks like this now. So we are talking now, we're moving away from contracts and we're moving on to invoices and receipts. Okay. So is anybody in the room familiar with any of those organizations or softwares?
I've heard of QuickBooks, but I don't know really.
Yeah.
That's what I'm using.
I was going to say, I'm going to try and learn about this myself, and I was like, that sounds interesting.
Yeah. Nobody else?
I've heard of Sage and QuickBooks, but I don't know what they are.
Yeah. Okay. So, and that's absolutely understandable. So when you're new to being in business, what predominantly happens when you're a new startup is you have an idea and you sit and figure out whether that idea is going to be of interest to other people. Can you sell your services? Can you get some income from it? And as I said before, from small acorns, mighty oaks grow. That seed of that idea is absolutely spot on. You've got to keep progressing that. But there comes a time when you have to ask yourself the question of, is this a hobby? Am I just trying to see if this will work, or is it a trade? And the moment it becomes a trade, and we're going to talk about that in a second, then it means that you have a legal obligation to inform the authorities that you are trading. That's your obligation. The authorities won't come to you and ask you if you're doing it, but you legally have to go to them. So this does happen from time to time. We get people who set businesses up, doing a bit of pieces in the bedroom, and then the next thing somebody says, "Oh, I'll use that. If you can provide that piece of software for me, that's quite clever, or I like that." And the next thing they've got £600,000, £2,000 a month coming in from these people who are using these bits of kit or this platform that they've built. That's trade. You're exercising a trade then. So therefore, you have to go to the authorities and tell them that you're trading. It's illegal not to. And the reason why it's illegal not to is because that is the government see that as committing fraud. You are receiving income that is not taxed, and you have no intention of telling them how much tax there is on.
At what point do you have to go? So the second you decide you want to trade is like after your first sale.
Good question. Good question. So the answer to that is it's the earlier of the following. Basically, receiving monies from a customer for services or products sold, the first one. Or if you're in a situation where you are working on a project and you know with all best intentions in 2, 3, 6, 9 months time, then people will be paying you for it, then you can tell the authorities then. The reason why you would tell the authorities early is because all the costs that you have setting everything up will then be tax deductible and will be allowed against your future profits. Whereas if you're in a situation where you're about to, you've been working on it for 9 months, 18 months, and then you think, oh, I've got my first customer, I'll best go and get registered or form my company, all those costs are lost. Specifically, if you're a company, those costs will be lost.
More benefits the earlier you do it.
Yeah, more benefits the earlier you do it. Absolutely. So we have an obligation to tell them. We have lots and lots of individuals that come to us and say, I started this little business out in a shed 3 years ago and I've made £6,000, £8,000, £15,000 a year, but I've never told anybody. And we have to go to the revenue and try and plead clemency for those individuals that have just made a mistake. Try not to get penalised and bring their tax returns up to them.
And if you don't do it, let's say you make the mistake of not doing it, then you have to pay maybe more than you would have if you had reported it.
Yeah. Yeah, the tax office, HM Revenue and Customs, have the right to penalise you for late notification. And unfortunately, see, this is an interesting thing that, as regards how this country works. The tax system in this country is what's called self-assessment. That says that every single person walking our streets has an obligation to consider whether they should or shouldn't tell the tax office about their activities. But people, different for us when we work in the industry, but people outside the industry don't know. So we end up where, quite understandably, people will come to us and say, oh, I've had a couple of quid doing this, and I'm selling these bits and pieces and what have you. Oh, it's trading. And you've got to tell, there is no workaround, you've got to tell the tax office.
So let's say I'm developing something, right? And I get some funding for it. Would I have to report that as some sort of income or not really?
But it depends on the nature of the funding,
Yeah.
because the receipt of grants is not necessarily trade. So the definition of trade for the tax office is entering into an activity on a repeated basis with a view to making a profit. So the receipt of a grant strictly isn't that, but it might lead to that.
How do they find out if you're not doing that? So if you don't tell them,
Yeah.
when do they like, I think they might be doing that? I know that sounds really bad on my part. I've not done any illegal trading.
No.
How do they find out?
No, it's a good question. It's a good question. So how will they find out? Okay, so, sorry.
In the same way, as we mentioned about the funding, so there are many companies or private investors like Angel
Yes.
who are interested in your plan or the business thing. So we should mention it in our contract or records for that this one company likes to invest and pay taxes on it, or we just need to reverse back to the company.
I think if I've understood your question properly, when you're receiving monies from any organisation, so any business, so any,
Personal kind of friends
yeah,
or relatives
yeah,
who like to invest in your idea,
yeah,
and the big companies, they invest as well.
yeah.
What are the situations in both conditions?
Yeah, okay. So if you're exercising services for a larger organisation, so you as an individual are turning up, doing some level of work and activity and getting paid for that. The question is that your only role that you're exercising, or do you have a few of those? If you have a few of those, then you trade. And that means that you have the right to tell the tax office that you're trading, and you can provide invoices to those organisations and they can pay those invoices, but you pay your own taxes.
But as per my knowledge, some company just bring equity from a particular organ, like my company, and I give them 20% of full share. Right?
Yeah.
And they invested in like 1,000 pounds.
Ah, sorry.
It's a different story.
Yeah, oh yeah, if they're invested, yeah.
This is the one scenario.
Yes.
But without giving equity, without giving share.
Yes,
And just based on your idea, the interest, whatever.
yes, I see. So that in real terms is the receipt of a grant or a gift.
Yeah.
So that's not strictly trade.
Yeah.
Yeah, so you can receive those monies tax-free unless there is anything in the paperwork that says it's taxable.
It's beneficial for the organization, which is just growing them.
Yeah,
Rather
so,
than
yeah, so in the organisation's books,
save tax and.
writing the monies to you, that should be literally a donation. Yeah, unless you've got an obligation to pay it back, and if so, that's a loan.
But with the condition that you can give it back to them.
Yeah, so there's a condition, so that means it's a loan. But that loan will either be repaid at some stage by yourself, so that's not taxable.
Yeah.
Or it will be waived in certain circumstances, which then that's when it becomes a donation or a gift, basically. So those such receipts like that is not a trade. You exercising services and getting paid for that is either employment, a job, or a trade. Does that answer it? Yeah. That's okay. So once you've got, so we've covered that off. Once you've got a repeated activity, then the question was, how do they find it? So let's take a very, very obvious example. If you're in a situation where you own a house that you live in, but you also own another house that you rent out to people, tax office know that you own that other house. And the tax office will get in touch with you and say, what are you doing with that property? And if you've been renting that property out, receiving monies, but not doing a tax return and telling the tax office about it, then they will insist that you do a tax return. So that's quite an obvious one. If you're a landlord and you're receiving rent and you're not telling the tax office, they know. It's just a matter of administratively, when do they get around to it? The question was, if you're exercising the trade, how do they find out if you've not told them? Well, the way that they will find out is that one day they will do a tax inquiry into a business which is one of your customers, and they will go down the payments that go out, and you'll be on there, and they will do a routine check and say, not aware of this individual or this, these 2 or 3 guys or whatever, doing a tax return for us, we'll then investigate into that. That's when the tax office will write to you and basically say, is this person you? Are you the people who provided this? And per those records, they're paying you some sums. Do you want to explain yourself? Sadly, sometimes with tax office, it's like talking to the police. They haven't got the job to do. They've got to get tax shielding. So that's how they capture it, basically. Or you've got to be absolutely honest. You end up in a situation where you're sat in the pub and you're talking about it, and there's a tax inspector on the next day. It happens. It does happen. You also, unfortunately, I'm sorry that this is a bit unsavoury, but people tell the tax office about other people's affairs. So you can phone the tax office up and say, Bob's doing this around the back of the pub and he's selling all these bookie TVs, and I know he's making a lot of money. I don't know whether you might want to look into it. And the tax office will take the details, and then they'll go and knock on his door. I know that sounds very, very officious, but that is how it works.
It's much better to just come up straight.
Yeah.
Hey man, I'm doing this. And,
Yeah.
You know, it is.
Exactly that, because if we, which we're going to get onto in a second, but the question is, why would you not want to tell the tax?
Yeah.
Why would you not want to tell them that you're exercising the trade? Well, it's because you've got to do a tax return. And a tax return can be an absolute pain to basically. We do as a firm about 400 of these a year, basically. So 400 for individuals and about 350 for companies. So if you're an individual and you're excellent, you think, I'm public trading, I best tell them. You literally just get online, register as self-employed online, and then you're on their system. And then you have to do a tax return. But that tax return, the reason why it's a problem is that the tax return will be 20, 30 pages thick. And you'll probably only put numbers in about 6 or 7 boxes. But the question is, what numbers in which box? And that's when it becomes a headache. So this is why some people are, I'm not doing much, I want to do a tax return, is because it's a headache. Tax returns are tricky. And there's a big declaration at the end when you sign it. You can only sign it electronically, but it says, I've told you absolutely everything. If I haven't told you absolutely everything, you have the right to come after me. And you sign that every year. We all sign that every year. So the tax return that will be put in front of you, that's put in front of me, is exactly the same as one that Alan Sugar does, same one that Deborah Meaden does, you know, and they'll have numbers all over the place. So it's complicated. Can be complicated. That's the reason why. That's what puts people off. It's officious.
And is it something that the business owner has to do, or could you outsource that to accountants?
Yeah, that's what we do.
Oh, excellent, yes.
Yeah, that's what we do. We laugh and joke at the office because I would say that specifically our individuals who do tax returns. If you have to do a tax return, you have to do a tax return. It's not your choice to say yes or no. There's a list of circumstances, and if you fall into one of those, you've got a trade, you've got a house, you've sold an asset, you have untaxed income, you have higher rate income. There's lots of them. You're a director of a UK company, then it means that it's the law, and it's the law that you've got to do one. And that's when our clients phone us up and say, "Oh, I've got to do a tax return in, and I don't want to do it. I don't know what to do. How much will it be? Now it cost you this. So, oh, well, can you guys do it?" And that's where we come in. So we come in on the basis of people don't have the time to do it, and people want to save tax.
Is that really expensive?
Not for a simple tax return. It's about £200, £250 plus VAT. But then once you've got a situation of you've got a business, then the question is you've got to do a set of accounts, which is what we're going to talk about in a second, record keeping, that basically accounts for all your ins and outs, basically all the money you've had, all the money you've paid out, declares a profit. So whilst your business is small, that's not too bad. That is only 3 boxes on the return. But once your business gets above a turnover, I think it's either £10,000 or £15,000 a year, then you have to do a much more detailed set of pages. So that's when the price starts.
And again, that tax return is not valid unless you don't have to do a tax return on that. If it's like a grant or something like that, you don't have to. So if it's declared as a grant,
Yeah,
you don't have to do a tax return.
correct. Yeah, a grant isn't trade.
Yeah,
And it's not income. It's not income in return for an activity.
it's only income once you produce something from that
Mhm.
grant.
There are occasional grants that are written differently, but in the main, that's how it works. Okay. So we'll go back to record keeping. record keeping in a pile of vinyl, which I've got at my house. Predominantly driven by the tax office, the record keeping. So once you're in a situation where you've got one or two people who are paying you for your services, then you are trading, you've got to tell the tax office, and basically you've got an obligation to compute your tax, pay your tax as you go along. Come back to it, that we work in under a system that's called self-assessment. It's exactly what it says. You as the individual, or with the help of a firm like mine, you have to tell the tax office how much tax you have to pay each year on your activities and pay it. And that's the way it works until the tax office says, we're going to have a look at that, so we might not like the amount of tax that you're paying. So this is the key thing, is that once your trade starts, you're better telling the tax office. You do not want the tax office telling you. Then that leads us to invoices and receipts, and basically a record of transactions. Now, it's critically important to any business that you can substantiate what monies you've had in from your customers, and also grants. Even though they're not taxable, you need to know that that £1,000 was a grant, as opposed to it being £1,000 of services that I bought from you. But also you need to be in a situation where you need to know what you've expended your money on. And under your agreement with the tax office, we're all the same, you have to be able to prove it. So you have to keep invoices and receipts. You should raise invoices to your customers, to all customers, basically. Likely a little bit different at yoga school. I never got, you don't need receipts for that, because it's more footfall, isn't it? People turn up, but you'll keep a register of numbers, I'm sure.
Yeah.
So, but for us, who are in the service industry, you provide an invoice for your service, and you need to keep that. But by the same token, you will go and spend money on car parking, on software, on buying a new laptop. We need to keep those invoices. We need to keep those invoices and receipts, because those documents, mainly soft copy nowadays, those documents, in essence, is the legal right for you to claim tax relief on those costs. If you turn around and you're doing your tax return and you say, I've got a new laptop here, but I can't remember how much it was, can't remember how I bought it, I'll just, let's say it was £1,000, the tax man will be right to say, well, no. So invoices and receipts are critical. You don't keep them in paper form like that. Everything's on the service. We don't do it like that. That's the way it used to look. So that's where these guys come, basically. So record keeping, once you've got a trade, is really, really important. As I mentioned before, if you've got transactions before you actually start making a sale, but you're incurring those costs because you're hoping to exercise a trade. So you might be having to buy certain software licenses. You might need some new kit. You might need some tools for your work. You might need whatever, I needed a calculator. This is how it works. Then you need to keep a note of all those costs, because you will get tax relief on those. If you don't keep a note, you don't keep your receipts, you're ineligible to have tax relief. Tax relief being, it reduces how much tax you pay. Okay. So your record keeping, number one, is you've got a legal obligation once you tell the tax office if you're trading to keep the evidence of your transactions. And number two, going forwards now, we really need to be using one of these software suites, basically. And the reason for that is because, whilst it's not the best drive of all time, but accounts an artist, it's in the cloud. So the whole point of keeping receipts and invoices now is the majority is soft copy in the cloud. So these software packages are absolutely superb at taking a photo of your invoices and your receipts, and they're automatically able to upload it. So if the tax office ever turn around and say, when you bought that laptop for Surface Pro or whatever for £800 from eBay, where's the receipt? It's automatically in the cloud. You've got it, basically. So record keeping invoices and receipts, including invoices that you send out to your customers, you have to do it. Have to do it. So that's absolutely great. The tax office will periodically inquire into traders' accounts and tax returns and say, I want the receipt for that, I want the receipt for that, I want to know why you spent that money on that. And they have every right to do that, basically. So good practice to get one of these software suites, and good practice to ensure that you are keeping all your invoices and receipts, specifically soft copy.
Which one of these would you say is the most?
For startups, zero is probably. Yeah, if you set up a business bank account with NatWest Bank, then free agent is free. And that's great. And Barclays Bank have just generated their own FreshBooks. So if you're a customer of Barclays Bank, you get FreshBooks for free. So, and these softwares are very, very clever because without talking too much about how it used to be up until about 2 or 3 years ago, this software will link to your bank. You'll press a button and all your transactions in your bank will go into that software. The moment it does that, it means that you're compliant to the tax office because you have that in, those are part of your receipts and invoices and record keeping. And additionally, we can get software either in that software suite or a special software where you take a photo or an invoice and a receipt, and it will automatically put it into your ledgers and save a copy of it. Now, when that first started, well, that was 5 or 6 years ago, everybody was saying, well, what's clever about that? Well, what's clever about it is it's facial recognition for invoices. Okay. So not only does it take a photo of Ian Walker & Co.'s invoice, it will automatically put it into your ledgers, so into your software, and it will automatically put it to accountancy because Xero, the algorithm in Xero or in Sage knows that Ian Walker & Co. are accountants. It's read it in the photo, so it puts it in. Clever, really clever. So
Can I ask
yeah, of course.
Oh. With business bank accounts and stuff like that, would you recommend getting a business bank account, or would you recommend like setting up just a separate personal account for a business?
If you're trading as a limited company, you have to have a separate bank account in the limited company's name. But if you're not trading as a limited company yet, then you can do either. But the key thing is to keep the transactions of the business separate from your personal transactions in life.
What do you mean by a limited trading?
Yeah. That's okay. That's okay. So let's talk about that. So a trading activity is a trading activity. Okay. And so, as we said before, it's entering into an activity on a repeated basis with a view to making a profit. So your decision then is, right, I've got to now tell the tax office that I'm trading. Do I want to trade as a sole trader? Do I want to trade as a partnership? Do I want to trade as a company? Or do I want to trade as an LLP, limited liability partnership? For the purposes of this presentation, let's forget about limited liability partnerships. They are things that were first brought to us about 22 years ago and were great for a limited period of time. There's still 1 or 2 of them kicking about for certain reasons, but mainly in the legal sector. So let's forget about LLPs. Partnership, sole trader, company. Sole trader is the easiest one to understand. And one person with this one idea, exercising this one activity, and therefore by definition, sole, singular, me, you're the only owner, basically, so you're trading as a sole trader. So you go online and you say, I want to register as self-employed, I'm a sole trader. If there's 2 of you doing it, then you can start and you're basically a partnership. By definition, you can't be a sole trader. Sole trader is 1. So you're a partnership. So you're 2 or more people entering into this activity who own the business. This isn't your employees. These are people who own equity in your business. And so therefore you're a partnership. So therefore you tell the tax office that you're a partnership. Okay. That basically means that the profits and losses are split between more than one person. Not your employees, the people who own the business. Okay. The third one is a company. So companies are a little bit different. So companies are a separate entity in the eyes of the law. So a company is called a limited company because the word limited relates to limited liability. So if we're in a situation where you are an accountant like me and you're exercising your work as a sole trader and you make a big mistake in advising a client and they get caught and have to pay £80,000 worth of tax, and you've advised the client the opposite, then there's a risk that the client will come to me and say, I want the £80,000 please because you misadvised me. So whilst hopefully that won't be the case, and it never has been in my history, then I end up, if I'm a sole trader, I have to find the money to pay that individual back, basically. And that means that my house and my personal assets are up for grabs if I can't make good that sum that's due. If I was a limited company, it doesn't work that way. If I was a limited company, then I end up in a situation where the company will pay the debt if it can, and if it can't, then the company will close down. I still get to keep my house. So that's what the word limited relates to in the word limited company. The way companies work is that you end up where, if for argument's sake, there's two of you with this great idea, and you say, well, Ian said something about forming a company, let's go and form a company, then two of you become shareholders. Shareholders are the people who own the company. And you can also be directors, the people who operate a company, manage the company on a day-to-day basis. For small businesses, they're usually the same people. I'm the one shareholder in my business, and I'm the one director in my business. Okay? So a limited company provides protection if things go wrong to the people who run the business, and it also provides tax advantages to businesses of all sizes and nature. The bigger that your trade becomes, the more tax advantages you get of being a company. The downside of being a company is that unfortunately the accounts and tax system is even more complicated to understand than it is for a sole trader, and it's therefore harder to do your own or more expensive for us to exercise that work. So as I mentioned earlier, for my little firm, we're literally halfway down the middle. Half of our clients are personal tax or sole traders or landlords, and half of our clients are companies. So to be a company means that you have to go and buy a company, appoint yourself as a director, allot the shares to you guys as owners, and then set up a separate bank account in the company's name. It's a legal requirement. And then you operate that way. The tax system, which we'll have to talk about another day, for companies is more complicated, but much more beneficial, specifically once your business gets to annual profits of 25, 30 grand a year or upwards. So that's why, that's how it works.
Do you have to have a specific amount of income to register as a sole trader or a company? Like, does your full-time job have to be the business? So for example, if I work part-time, but I still also do the business and I get like a little bit of income off that, but it's not anything enough to sustain me, will I still have to be like, oh, I'm still a sole trader, or I've still got a company in that?
Yeah, that's a great question. So you can, if you have a job, a vocation, and you have a business on the side, then you can run that business as a sole trader, a partnership, or a company as you see fit. So it's just probably going to be a little bit smaller because most of your time spent at work, but you still have to tell the tax man that you're trading, basically. Because the tax office are not interested as regards whether you're trading at £1 a year or £10 million a year. It's if you're trading, then you've got to tell them, basically. So for yourself, you exercise your business on a part-time basis, possibly with the hope that it might become full-time, then you can operate those trading activities as a sole trader, a partnership, or a company. It doesn't matter how much you do. It's your decision how you operate it.
Cool.
Say again, sorry?
How would you become a company?
How you become a company is, well, basically, you register the business at Companies House in Wales, and basically you give the company a name, and you sign some forms that basically says I'm going to be a director, so you're going to manage and run the company, and then you also sign some forms that says you're going to own the shares, the equity, that you're going to own the shares, the equity in the company. That could be just you, it could be 5 of you, it could be 2 of you, it could be 50 of you.
Is there a benefit to having more people with shares in the company? Just
There's a benefit and a negative. So the benefit to having more shareholders is you will end up hopefully in a situation where you've got more people to bounce ideas off. But normally shareholders, you've got to bear in mind, shareholders are the owners, the directors are the people who are supposed to be running the thing. So more directors is normally the thing. If it's a matter of I'm having to make all the decisions on my own, it'd be great if I had somebody stood next to me who was going to help me with that.
Yeah.
So having more shareholders is, you wouldn't normally go for lots of shareholders for operational management of the business and decision making. But the time that you would go for more shareholders is when your business is starting to garner some traction as regards value, and you might go to a shareholder and say, an investor, and say, would you like to buy some of the shares? So that investor might put £10,000 into the company to buy 10%, 15% of the company. Then suddenly you've gone from 1 shareholder to 2 to 3 to 4.
And doesn't matter how many, like, quantity of shareholders, but if the directors are more there will be a problem in future for the company's growth and present situation as well because of different mindset and conflicts maybe occur.
Yeah, yeah, and that's a really good point. So if you have a company and you have directors in there, then you would have a contract between the directors, which is called a service agreement. Confusingly, in essence, it's a contract of employment.
Yeah, and environmental, like someone just handling marketing, so manufacturing.
That's right.
That's with the back.
Yeah, and it would set rules as regards, everybody go off, you do the marketing, you do the accounting, and you go and do this, and we'll meet up every month and we'll bring together, and in that meeting, there will be some notes of what's discussed, when somebody will say, so marketing guys, yeah, go and speak to that guy and that lady there, but we're not interested in these here, the directors have decided. Now, that individual might want to go and speak to all of them, but if the directors decide that you're going to go to those two and not to that one, then that's what happens. Because the business isn't all about you. It's about the collective, basically. So that's how it works. So limited company, lots of small businesses, startups, start trading as sole traders or partnerships and become a limited company later. That's what I did. So when I set my business up, I was a sole trader for a while, and then what you do is you sell the activities into your limited company. So often for small startups, you think, well, God, do I want to buy a company? Do I want to put myself in a position where I just don't understand what goes on? Then you might want to start as a sole trader or a partnership. The risk is lower because you're a small business. And then as the business gets bigger, which is where I was, then it was a case of, right, I need to be a company now because we're bigger. I need the tax efficiencies and I need the limited liability risk. Is that going down? Has that answered that question?
Yeah.
So, you know, you need a bank account to be a company.
Yeah.
You need a separate one to be a sole trader, and would that be in your personal name or the name of what your company would be?
That's a great question. That's the same as your colleague on Teams has just asked.
Ah.
Yeah, that's okay. So company has to have one in the company name. You can have a bank account, any bank account for the business transactions. There is no law stopping you doing that. But if the bank itself finds that you're running a business through a personal bank account, they'll want you to convert it into a business account.
Right, okay.
It makes no difference apart from they'll charge you.
Right.
So what the number one for new startups is try and keep the activities of the business, the spending, the income and the outgoings separate to your personal bank account. So two separate bank accounts, personal bank accounts, great. Having it all together, don't do that. The reason why you don't do that is because if the tax office ever look into your affairs, this might not sound like much, then it means that they have a right to look at those bank transactions, then they have a window into your personal life, and you just don't want that. Because the tax office will then say, well, what was that transaction there? And what was that? So, well, this is me buying an old TV, obviously. They get hungry to think that they're missing out on tax. So keep the two things separate.
Thank you.
And whatever name you start, like in the bank account for the business.
Yeah.
It doesn't matter actually, because I studied somewhere that you can change after some time whenever you go and take, and it will be like frequent as well.
Yeah.
As the biggest example of that, Reliance.
Yeah.
There are many companies that have changed frequently the name.
Yeah.
Because of different production line patterns.
Yeah, exactly that. You can call, whether you're a company or a sole trader or a partnership, you can call your business whatever you wish. The restrictions on company name is it can't contain any swear words. It can't contain any reference to the crown. And it can't be used by somebody else. When it comes to non-company names, you can call it whatever you want, basically. But if somebody else is out there with the same name, then you might get a phone call one day that says, why are you trading as that? So a little fun fact for me is that my accounts practice, I wanted to call it Walker and Co. And there's at the time there's a firm system in New York called Walker and Co. And I was chatting to one of the partners from that, and he said, I'm going to speak to my fellow teammates to see if we're happy about that, because two Walker and Co's in York might be a little bit confusing. And they came back to me and said, we'd rather you didn't.
Is there any advice for like choosing a name? Because I thought a bunch of names, obviously I've checked the real thing, so there's dozens, and I thought, can you use your initials? But my initials are BT, and BT Media is somewhat a big corporation.
Yeah, don't do that.
So is there any advice like finding like names to call companies or affiliates to find out the names really?
You can call it whatever you want. You can call it whatever you
I
want.
want it to be an actual company.
Yeah. Yeah, you can call it whatever you want. So as long as it doesn't carry any swear words, it doesn't purport to be related to the crown, and it's not exactly the same or very close to something else. The an interesting story from when I was very young, back when I was about 20, was that I was doing the accounts for this business, and the business was called Katana Martial Arts Limited. So this is 30 odd years ago, so I'm not breaching any confidentiality. Katana Martial Arts Limited. And I started putting these accounts together, and I kept thinking, this doesn't sound like a gym. What's going on? And that was a hotel. But for some reason, they'd call the company Katana Martial Arts. And they were quite entitled to do that. It was misleading for people. It's misleading for me, but they're allowed to do it. So you can call it whatever you want. People often say hybrids of their names or their dogs' names or places that they live in or things like that. So it got even worse for me because my company is IWC Professional Limited. For those, some people might know that IWC is a maker of watches. So we've got those guys got in touch with us and said, you can't call yourself IWC, so because the IWC you can even walk and go. So I have to change that. But anyway, well, call it whatever you want as long as it doesn't support to being to the king or to the crown. It doesn't really swear words. Is that okay so far on those bits and pieces? Yeah. So on your record keeping, which we've covered some of this, why are invoices and receipts important? We've talked about that as regards your obligations to the tax office, but we're going to talk for a few minutes about VAT. Does anybody know what VAT is? So VAT, value added tax, is basically when you go out for dinner and it's £20 for that steak, that is £20 including VAT. Because food that's being served to you in a catering supply has VAT on it. When you go and get your car serviced, that has VAT on it. When you go and buy your insurance for your house, that has no VAT. When you pay your bank charges, has no VAT on it. Very, very confusing. So VAT is a discussion for another day. But VAT, if you're in a situation where you exercise an activity and your turnover, so your income from your customers, is under £85,000 a year, then you don't have to register for VAT. It just doesn't matter. Just forget about it. But once you go over £85,000, then you have to register for VAT. That's when your obligations for receipts and invoices goes even higher. Because on an invoice, so if you came to me and I did your accounts and your tax return for you, £200 plus VAT, it's 240 quid. You get the £40 back off the revenue of the tax man, because that's VAT. But to do so, you've got to pay me and you've got to prove that I charged it. And that's when your obligations for receipts and invoices are even higher. Because the moment that you say, oh, I've kept all these 100 invoices and receipts from my people that I've spent money on here, but I've lost Ian's, then you can't have that back. And you're entitled to have that VAT back. So receipts and invoices to your customers and receipts and invoices when you spend money in your business, really important. It's critically important when you come back registered, because if you don't keep them, it'll cost you money. We don't want that. Is that okay? If we've got time at the end, I'm quite happy to talk about VAT. But, so why would you want to keep business receipts and invoices? HMRC, HM Revenue Customs, that's the tax office. That's your primary one. Second one is investors. If your business has been going pretty well and somebody comes along and says, I really like that, what would you do if I give you £50,000? Or get a marketing campaign and we get more customers and maybe make our offering a little bit better, a little bit cleverer. Right, I'll give you £50,000. The chances are is that the investors will want to see your accounts. Have a look at the ledgers. If you're in a situation where you don't keep your receipts, you don't keep your invoices, it's all a bit of guesswork. Number one, you're breaking the law with the tax office. And number two, the investor's going to say, I can't invest in this. It's a bit like Dragon's Den, if you watch that. I can't invest in this. You don't know what's going on. So keeping your records and ledgers correct and your invoices and receipts is important for investors. Next one, current shareholders. Why is that important? The reason why that is important is this is for companies only. Shareholders are companies. You're a director, you run the business, you might own some of the business. So let's say if I would say that there's two of you as directors, you own 30% each. but there's some other people over there that own the other 40% of the business. Okay? As a director, you've got a legal obligation to maintain all the books and records of the business. Okay? So if I'm a shareholder and I'm on this 40% and I say, these results aren't very good, I thought we'd been on that, I'm going to have a look into them. If that investor then, that shareholder then looks at it and says, well, we ain't got the books and records properly, this is a mess, then you as the director are in trouble. Not only are you in trouble because you might lose your shareholder, but also you're going to be in trouble from trying to get future shareholders. So therefore, keeping invoices and receipts in an orderly manner is really good. Okay. Finances, same again. You go to the bank, for argument's sake, and say, will you give me a loan? Then they'll look at your accounts and they might look at your books and records. And if things don't stack up, they're not going to forward you the money. Others, what I've tried to not put there, because I appreciate this is early days for your businesses, is specifically when it comes to selling. If you're going to sell your business, I get involved with buying and selling businesses for my clients. I've done that for 30 years. The first thing I do is to see how well they keep their records. Do they keep all their invoices and receipts? Do they put their accountancy fees to accountancy, or is some of it in insurance and some of it somewhere else? Is it straightforward and correct, or is it misleading? So record keeping is not just for the tax office, and it's not for the fun of your accountant. It's for all future eventualities. So good practice from the start is the answer. Again, invoices and receipts, good record keeping is protection. It means that the bank are never going to turn around and say, I don't understand what's going on, I want my money back. Shareholders not going to do the same, causing problems with future investors. Does that make sense? We can happily, so I appreciate it's 20 past, we can happily come back to that body of the chat in the Q&A near at the end. But I'm going to move on now to bits and pieces with regards to contracts to protect your work, basically. Anybody know what intellectual property is?
Like patents and stuff.
Yeah. Yeah. Any others? Patent, copyright, trademark. So intellectual property is invisible assets, what we call intangible assets. Tangible means you can put your hands on it, intangible means you can. So in essence, they're out there in the ether, basically, but they're really valuable to your business. Okay. So let's take, for example, let's jump a couple and get to that. Why do you think those trademarks are important to those organizations? Because that's intellectual.
It's their identity, it's how you recognize their brand.
Correct. How you recognize their brand. Absolutely. And the thing with brands is that brands have attached to them an asset called goodwill. And goodwill is, what is the value of your business if we exclude the actual nuts and bolts that we can put our hands on? So if you looked at my business, how much are my computers and my furniture and IT worth? £10,000. If you looked at my brand and my goodwill, how much is that worth? A lot more than that. Okay. So trademarks is just one intellectual property, but that is why virtually all organizations have some form of trademark. Because number one, marketing wise, our brains work on visuals as well as on actual writing. And secondly, is because in real terms, the value is behind it. So you want to protect it, because what you don't want is somebody, whether it be somebody down in Brighton or somebody in Beijing, saying that they're going to call their cola roller cola, whatever it might be, and have it looking exactly the same. Not allowed to do it, because they're passing themselves off as Coca-Cola. So these brands, not only the biggest ones in the world, but these brands are protected by IP, by trademarks, which says you will not use that. As you can see, specifically on the Starbucks one, it actually says TM on it. That says that's trademarked. And in years gone by, every single logo used to have TM on it. Because TM means it's been legally protected badged by IP. So that means that there's a contract and there's a global, for these guys, a global stamp that says you cannot set up any business and have the golden arches. You just can't, you can't do it. So you'll see loads and loads of businesses. The ones that always makes me laugh is the Kentucky Fried Chicken, KFC. You go to lots of places and there's KFC, but it's not Kentucky Fried Chicken. It's called something else. You know, they're flirting with breaching those trademarks. If you're a small business like mine, or if you're a large business like Starbucks or McDonald's, and you can prove legally that somebody's in breach of your trademark, then you can sue them. And you sue them to stop them using it because you might be losing trade profit. But you can also sue them for damage to your trade brand, basically. So I've jumped a little bit there, but trademarks are the easiest ones to get your head around, basically. Patent, copyright, trademarks. Okay. We're going to do each one. So, as I mentioned there, intellectual property being territorial is a really interesting one. One part of the intellectual property, patent. Okay, so if I devised a desk like that folded up to be that small and you put it in your pocket, then I can patent that design and that functionality anywhere in the world. So that means that I go to lawyers in the UK, in Europe, in the US, in Asia, and basically say, put a formal patent application in for this clever table that I built. And as long as there's nothing like that currently out there, then it goes through a process to make sure there's nothing like that out there, and then it gets stamped. And that means that nobody else can make that fold-up table to this size without either breaching my intellectual property and therefore they'll pay me damages, or coming to me to say, it's a bit like yours, can I pay a license fee? So it protects your innovation. Really, really important. Patents, specifically, territories. So if you go away from something physical like that, and let's think of some IT, here's the interesting one. In Europe, you can get a patent for everything, but not software. Nothing that's called soft technologies. If you go to the US, you can get patents for soft technologies. So we have and we act for organizations who built very, very clever platforms, algorithms, functionality that is all soft copy in the ether, and they're going to protect it in the US. And they trade it in the US because it's protected. They don't want to trade it in Europe because it can't be protected. Somebody could lift that, use it. So it's absolutely critical. So Europe is miles behind the US for that.
Physical as well.
Sorry?
Physical property.
Physical's different. Physical patent rights and physical matters in the US are the same as they are in Europe. And that's all of Europe. It's not the EU. That's all of Europe. Same with Asia.
I know it has nothing to do with it.
It's okay.
And like, but why is it not? No.
Well, it's only my opinion. I'm not the expert.
No. Okay, yeah. Why do
Yeah.
you think it's not like software is not protected under the European area?
This is only my opinion. Right? It's not factual. It's just this is how I see it.
Yeah.
I don't think we know how to do it. I don't think we know how to protect it. Whereas in the US they do, because the IT revolution globally was led by Silicon Valley in California. It wasn't, however great we were in Europe, it wasn't led by us, really. We did some clever bits. We invented the computer, but in really the commercialization of tech started in the 50s and the 60s in California. So therefore America were way in front.
If I, let's say I patent my idea, which I should, but in the US, is that patent valid in Europe or like globally, or is it just patents like that technology can, is it only, that patent is only valid in America?
Yeah, it would only be valid in America. And that's the risk for you. Is that most tech now is in the cloud. No matter where you are in the world, you can get to it. So how do you protect it when, because it's not a matter of, well, we're in the UK, so therefore these are the rules in the UK. Once you put it out there, it can be used anywhere. So if you're in a situation where you're exercising and recognizing some value to what you're building, we as a firm, we've been here dozens of times with spin-outs from universities and university graduates, postgraduates, building some very, very clever things, whether it be physical robotics or whether it be platforms or algorithms. We've helped businesses who have built algorithms that are now sat in the middle of some very, very successful products that are out there. At some point, you've got to go and speak to an IP attorney in the UK to say, well, what do I do? Because the worry is that you're going to lose it all.
Yeah, I mean, I live in the US as well, so I
Yeah.
can just go and do that, but I mean, it doesn't matter because still that in Europe it's not valid, so like.
Yeah.
Okay, nice.
Yeah, exactly. And unfortunately, that's the situation that we're in, is that you will need some advice on that. So if we get time at the end, there's a quick story that I'll share with you when I went to China for a business at York from York University. What happened there, not there. So if we get time at the end, we'll share that. I'll catch you. So territory is really important. Just because these are the rules in the UK, don't mean to say that protects you globally, basically. So patents, mad professor, invented something clever, basically. So patent is intellectual property, it's invisible. And what you're actually doing is you're getting the government or worldwide approval that what you've built is clever and unique, and nobody's allowed to do the same without either breaching your patent, if you can sue them, or pay you a license fee for doing it. So patents are great. They're just tricky to do and to exercise because the price for a patent application will, in this country, will be £20,000. And then it sits out there for periods, 18 months, 2.5 years, to see if anybody comes along and says, well, we've done that. And we've got patent number 385,462 that was granted 10 years ago. It's the same thing. And that means your patent is lost, your application is lost. So when you see businesses, when they say patent pending, that's why. It's because it might be the cleverest thing of all time, but they haven't got the stamp on it. They're just waiting. So patents, once you've got a patent or a patent, whichever way you want to put it, territorially, you get a patent in the UK or in Europe, but then you might need one in the US, you might need one in Asia, you might need one in the subcontinent, Australasia. Depends what you're going to do, depends what it is. So if you have got something that is worth protecting, commercially very, very clever, then patents are absolutely critical. But there are no shortcuts to how much it costs. It takes time and it costs a lot. But some of the best products in the world would not be with us now if they didn't go through that process. Right? This one. Is that all right? Okay. Tricky, but worthy. So trademark is basically, I think I'll probably understand what trademark is. It's those logos, and you're not allowed to set up next door and have one that have your logo that's a black apple like that, but with a slightly smaller bite out. So it's to protect the Apple name, the Apple brand, and the Apple goodwill, the income stream. So these logos that are trademarked are worth billions. My logo is trademarked. Nobody else is really in a rush to form an accounting practice if already in Wacom Code. But if you go to KPMG, biggest accountants in the world, there's your trademarks because people would like to be KPMG. They like to call themselves KPMC, and people get mixed up, and then you get some of KPMG's clients. It's not allowed to do. This is to protect. Come back to it, it's all protection. So that's your trademark. Copyright. Anybody know what copyright? Why that's different?
Is it similar to trademark work?
I think you're nearly there.
Like a bit of writing. Right?
Correct. A body of work. Art. Copyright. Copyright is protection for the generator of that work that says, this is mine. It's not yours. It's mine. And anything that's derived from it will come to me. So if you are, specifically if you're an author, or if you're a writer of technical literature, doesn't have to be fictional, then copyright is an automatic. You go to a publisher, they will copyright your works, basically. And it means that however that's sold, whether it's sold online, as an audio book, whether it's sold as a physical book at Waterstones, it means that you get a cut. Same as regards if you've got musical releases with the Performing Rights Society, that's a copyright. Same for works of art. So copyright is like a patent, but for creative arts, basically creative works. But it can also be copyrighted on things like instruction manuals. If you build, I don't know, a Port Carrera, then the actual how do you maintain and repair that? Once you release a book of it, you copyright that book. Because otherwise, a bit like WikiLeaks and on Wiki, people will be saying, just do this. Just take a hammer to your Porsche, it'll be fine. Porsche say you do it like this. So copyright's not always about the art, it can also be factual. Protects what you're doing. So intellectual property, again, it's protection. So you're protecting what you have generated, what you have created, and in essence, part or if not the thing that you derive your income from. IP is something that every time I've looked at it with the businesses that I've advised and other side businesses that I've been involved with, scares me to death because it's hard to understand. It's expensive, and you think, why should I bother? And then you end up in a situation where, in certain circumstances, you've seen clients that have done it, have bothered, they've got very frustrated through the process, but then once it's been granted, the value of their business goes up, the value of their work goes up, they're protected, they get more investors, they make more money. So it's a great process to go through, but you've got to recognise what you might have in your business that needs IP, and is it worth it, basically. So most small startups, it's not. I don't need any IP protection because what I do is the same as the accountants next door, the accountants next door, the accountants next door. We just do it better, naturally. But so I don't need any IP protection. I don't need a logo in real terms that protects me because we're just accountants. There's nothing. We do a very technical job, but there's nothing innovatively clever about what we do. So, is that okay as regards IP? A bit sticky is IP to understand. Makes sense. We've got any questions on that?
I have a question.
Yeah.
How would you copyright a blog? So, because I've got a blog as well as wanting to teach yoga. How would I write my writing on there if it's just sort of online for anyone to access?
Well, that's a great question. So that question needs to go to a solicitor.
Okay.
Yeah, you need to ask a solicitor about how you would copyright that. And the reason for that is I don't know legally where the line is between social media. So we all can all do stuff on Facebook and whatever it might be. And why do we not copyright that? Well, because strictly it's from us and we can be held responsible for it, but it's put out by somebody else. So where's the legal obligation? With all social media, that's a big question, basically. Obviously, with Elon Musk checking Twitter, then there's been a lot of talk about that. Who's responsible for the content that he puts up or that company puts up? So I can't strictly answer that question, I'm afraid. But it's a question that would be worth a half-hour phone call with a friendly solicitor, and you know somebody. Any questions on IP? Any questions on all of it that we've been talking about, or any business matters? I'm an open book for another half an hour.
It might be a bit out of your like area, but it's in terms of like the shareholders and investors.
Yeah.
When a company like goes public, what's the one of the bigger companies anyway?
Yeah.
How does it work in terms of like shareholders? I know when a company becomes like publicly traded, that's when you get all the stocks and shares and stuff.
Yeah.
Is that something that?
Yeah.
How does that work?
I can answer that. Yeah. So the limited companies are often split between private limited companies, public limited companies. Private limited companies are when the people who own the business are people like you and me. There could be 1,000 of you, but it's people like you and me. A public limited companies is when the business is put to the general public for investment, and basically the company don't care who you are. It will cost you so many pounds for so many shares, basically, and do you or don't you want to invest? So that's what's called a listing. So we can list our businesses in the UK on the stock exchange in London. We can put it on the AIMS listing, which is like a mini stock exchange for smaller businesses, predominantly smaller businesses or for younger businesses. Or we can put them on, there's a tech one, bits and pieces like that. So go for a listing. Invariably, what you would do is you would build your business, your limited company, with you and your mates being the shareholders. You might end up with a couple of investors. We have the businesses like that, where the founders built this business 5-6 years ago, but now they've got 6, 7, 8 other investors, but they've rarely met. They've just basically gone to investment houses and said, this is us, anybody want to do this? That's not a public limited company. You're just asking investors if they want to invest in you. But the moment that you literally say, this is us, we're hoping to get £1 million worth of funding and you send it out to the general public, then that's what's called a listing. Basically, you go to a specialist who raised what's called a prospectus, which will include your accounts, but be your profile, where you go in, what you're going to do with that money, and all that stuff. And that's when you get listed. So it's your choice. It's just the process to go.
It will depend on like small cap, mid cap, and large cap.
Yeah.
Kind of listing on the share market. But
Correct.
on the beginning, it will be considered a small cap and then grow one big cap.
Yeah, exactly. And as a UK business, you could opt to take a listing on the New York Stock Exchange or the Tokyo Stock Exchange if you want. Whole barrel of issues there as regards legislation, which laws are you operating under, who's going to be invested. Well, who's going to be invested really isn't the problem, but this is when you hear about these businesses that list and they're oversubscribed. That's when literally they're saying that we're hoping to raise £10 million, and basically they've got enough applications to raise £15 million. Well, the rules for public limited companies are very, very strict. And therefore, if you only went for 10 and you only going for 10, you might want to do a second one to get the extra 5. But that's how it goes from being a private limited company to being listed. Any other questions? Anything I can help you with?
You were going to say something about
Oh, China. Yeah, so quickly about China. So when my practice was at the University of York, I got asked by one of the spin-out businesses there. So these are postgraduates who built some clever stuff, and this was 11 years ago. And they came to me and they said the UKTI, so the UK Trade and Investment, so the Department of the UK government, are going to China, and we wondered whether somebody should go to represent us as a company in China on the basis of, if we make this work in the UK and we want to set it up in China, how do we do it? So would you go and I'll be happy, and would you go and talk to people about how we need to set things up if we're going to get this going in China? Yeah, great. I said, yeah, I'll go. That's absolutely fine. With pleasure. So, but the key point was that their tech was soft technologies out there in the ether, a bit like how it sounds like your business is going to be. It's out there in the ether. Why do we have to be in China to do it? Because you can operate it from here and it can be open to everybody. Well, what they built then was very, very clever, and it was a feed, but it was a feed with an algorithm in it that was very clever that linked this to this. But because of the people's interest, they built the company, their interest was in politics. So they built this very, very clever piece of software that monitored all sorts of releases about UK politics. So about a week before we were going, they turned around and said to me, so this is the UK government, turned around and said, Ian, we've just realised that you're going strictly your political monitoring company and you're going to go to China. Chinese, what about that? Right, okay, well, what do we do? Got to turn it off. So I said, right, okay. So I went to the tech guys at the company and said, you've got to turn it off while I'm there because I'm not allowed to go. And politically, that's got to be cleared by the government, by the Chinese government. We weren't interested in that. It was about what the tech did. So we got there. So I got there, had this great week. And on the last day, the last full day we were there, it was like speed networking. So people were coming and having 20 minutes with you and all this stuff. And I had an interpreter with me. This Chinese guy sits in front of me, he's got a hoodie and all this stuff. And he's talking to my Chinese interpreter. The next thing, my interpreter starts shouting at her and he starts shouting back. And I said, what's wrong? And she said, don't matter, Mr. Watt, don't matter, Mr. Watt. I said, what's wrong? He said, well, he's just asked that we send him all the code, otherwise he's going to press this button, and he turned his computer on. And somehow he got to our site and basically was going to tell China and the Chinese government that I was in the country monitoring their politics. And he was trying to blackmail me. And it was like, how on earth? So of course, like, just turn it all off. So obviously turn it off. I get back and speak to the guys at the University of Business, and I said, how did that happen? And they had just literally turned it on to test it, to test something new. And this guy must have had it set up. It came via Russia over to him. Now, the reason for that story is not, oh, my name, that's a bit scary. It's about IP. How do you protect it when you can't really control where it's going once it's out in the cloud? I don't know the answer to that. But that was my first, that was 11, 12 years ago. It was my first ever time that technology like that is commonplace now. I've never seen it like that. What do we do? Turn it off.
It's just, I don't know. Should just be skipping.
Yeah, well, you need to speak to people. You need to, I would, in your shoes, I would be trying to speak to people either in any level of IT faculty that here based at our University of York or anybody else you might know. Speak to a solicitor, put it out there on business forums, how many events. So that's not an area of my expertise, you can tell, but I'm just aware that it's a different ballgame that if you were setting your IT company up in America to only be available to American citizens, then your protections would be a lot more clear. They'd still be very expensive than it is over here. Thank you. Mhm. Anybody else? Any more questions? Ladies, any questions? You know how to protect your artwork? There we go. Yeah, there we go. Any other questions? Anything online?
Thank you, Ian.
Pleasure.
You are the saints.
Pleasure. I'm hanging around if you want to catch me.
And thank you all for those who could attend in person. And there were 3 people who were there online. So Julius, Lily, and Abigail. Thank you. And we'll call it a day.
Thank you for coming, guys. Go and enjoy the sunshine.